as with any new ETF, it takes a while to educate investors, asset allocators, advisors about these new offerings. So slow as it goes, but the most important thing that's happening right now is, we're watching the plumbing, and the plumbing works. That's extremely important. 21 Shares is the largest pure play ETP crypto provider in the world with roughly $2 billion in assets. So that has been mostly in Europe. This is in the US now. And so we wanted to make sure the plumbing works, and it's working beautifully. And I do think that a spot Bitcoin ETF will stimulate, once institutions and other investors have a toehold into the space, they will want ways to diversify. And so we wanted to be ready with those 5 strategies to help with actively managed diversification strategies. Some are lower volatility, some are more diversified with digital asset equities. So again, we're trying to be, shall I say, a go-to for anyone thinking about investing in digital assets. We're very optimistic about Coinbase. Now, if you, I'm going to go back to what I mentioned about institutions. Institutions don't want to bother with custodying and so forth. They want and tax issues and other infrastructure. They just want to be able to access quickly Bitcoin and other digital assets. We think longer term, and so if we're right, a spot Bitcoin ETF will be the most liquid way to access exposure to Bitcoin, and I think that liquidity and the ability to move in and out quickly is going to be important to institutions, because some institutions, yes, will be buy and hold. Others will use the ETF really as a way to play a new asset class. And, they'll want exposure at times because the diversification increases risk per unit of, increases return per unit of risk. So I think they can't ignore it. And so this is a very good way to access it. We've had both appreciate quite dramatically this year. This has been the best performing asset by far this year. And we always do take profits. It's just simple portfolio management. On top of the actual price appreciation of Bitcoin, we've had the discount closing relative to NAV for GBTC. So that's been, a double impact in terms of appreciation. So it's just traditional portfolio management.
Hey, crypto explorers. Welcome back to Crypto Street. And today we're diving into the wild world of Bitcoin as we approach the potential approval of spot ETFs in January 2024. Hit that subscribe button and let's break it down. According to CryptoQuant, there's a 90% chance of ETF approval, and we're in for a classic sell the news roller coaster. Brace yourselves, BTC might nosedive to $32,000 in January 2024. Why? Hot unrealized profits, my friends. Miners are cashing in, and it's creating some serious downward pressure. It's like predicting the weather in the crypto universe, stormy with a chance of profit-taking. Now, what's the word on the crypto street? The queen herself, Cathie Wood from ARK Invest, is here to spill the tea. She's not ruling out a short-term sell-off. It's like the market's doing a quick chocha after the big news hits. But here's the kicker. Cathie's still rocking the bullish vibes for Bitcoin's long game. Why? Because even a tiny institutional investment can move mountains in the crypto world. She's betting on trillions flowing into Bitcoin post-ETF approval. Let's call it the crypto wealth tsunami. He's CEO of Noons, peer-to-peer. P2P Bitcoin trading is the United States public enemy number one because its potential widespread adoption by people from the global south represents the world's first real threat to the U.S. Treasury system. Yusuf added that the United States' disdain of P2P marketplaces is also due to its awareness that peer-to-peer commerce is the best path to enable truly free commerce in the Global South. Arthur Hayes, CIO of Maelstrom and former CEO of BitMEX, discussed the eventual demise of Tether and other stablecoin companies. Hayes explained that Tether's business model, which consists of taking dollars and investing in treasuries, will eventually be cannibalized by big banks like JP Morgan when they get allowed to issue fiat-backed stablecoins. Now, let's continue our discussion with Cathie Wood.
After being denied a few times without any questioning, to be questioned back and forth this time around has been very encouraging, and also shows the depth of the SEC's knowledge of the issues and understanding of them. So we're quite gratified and, hoping. We're very encouraged with our partner, 21 Shares. I think we've crossed every T, dotted every I. We believe to the SEC's satisfaction. I think the messaging around the 29th is, look, if you're not going to be ready to go on or around, let's say, January 10th, then do not submit anything more to us because we have too much to do here. And again, that also is encouraging because it feels like a bit of that the SEC is setting a deadline for itself. So that's great. Biggest controversy, and this is in the press, but I'll highlight it because I think for most of us, it has been, wow, are they going to allow in-kind transactions? So, limiting the tax impact of transactions, or is it going to be primarily in cash? And I think, as has been reported widely, I think it's cash, not in kind, at least at the outset here. And I think there are just a few people within the SEC who are just somewhat concerned that banks will be forced to touch crypto. We're not sure they will be, but we're talking about something very technical. So to answer your question, yes, very technical. But that has been, I think, the big issue as we head hopefully towards a resolution. There will be repositioning for all kinds of reasons, but I do also believe that the SEC approval will be a green light for institutions who have been holding back. Now, we've had a big anticipatory move here. It wouldn't be surprising if we saw us sell on the news. That's an expression in the market. Sell it. You have a lot of anticipation. A price moves up. The event happens, and then especially fast trading organizations sell on the news. But beyond that I think will be just maybe a very short-term phenomenon. I think that the institutional push into Bitcoin will be quite significant to the price. In fact, in our price expectations going forward, the biggest contributor is institutions. As they move, they don't have to move very much in. They can move. There are trillions of dollars in assets to be allocated. If they just move in 0.1%, forget about 1%, but even 0.1 or 0.2%, that will move the needle, especially as we know, the number of Bitcoin outstanding right now is about 19.5 million. And the furthest that number is going to go is 21 million. So the scarcity value as institutions move in will begin to move the price, we believe.
Nick Carter from Castle Island Ventures has joined the crypto carnival. He's dancing between a short-term sell-off and a medium-term moonshot. Picture this: ETF approval unlocking new capital classes, throwing a crypto party that even your grandma's neighbor wants to join. Nick's playing the long game, emphasizing the positive structural flows that could catapult Bitcoin to new heights. It's not just a roller coaster, it's a crypto space odyssey. That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.